Well, let's move on and put the spotlight on Inox Wind. The wind energy solutions provider has won a repeat order for 279 megawatts for its 3-megawatt wind turbine generators from a large commercial and industrial player. To understand what this really means for the company and to talk about the outlook for the business going ahead, we have Devansh Jain, Executive Director at InoxGFL Group, with us. Devansh, thanks for joining in. Season's greetings to you. So let's just start by understanding this. 279 megawatts for your 3-megawatt wind turbine generators. Typically, over what period of time does this get executed? What is the revenue implication? And, where does it take your overall order book position?
Good morning. Thank you for having me with you, and very happy season's greetings to all of you and your viewers.
Thank you.
So what we've announced today is a 280-odd megawatt order. It's a 180 megawatt pure play equipment supply with very limited scope, turnkey, services, as well as a 99 megawatt turnkey order. The thumb rule order value ranges between 7.7 crores to about 8 crores per megawatt for a turnkey order. So in order of magnitude, this would be an order win in excess of 2,200 crores. This is excluding the O&M piece, which obviously is a services business on an annual basis for the journey of the contract. In terms of order book, I think we were at about 1,276 megawatts as of 30th September. And I think with this order, our order book exceeds 1,550 megawatts. I think we have a huge pipeline of orders which we expect to close and announce over the next few months. And I think we aim to close FY24, hopefully, with enough orders to cover us for more than, not just FY25, but partly FY26 as well.
Devansh, okay, I'm just going over the numbers again. If I heard you right, you said the revenue implication translates into about 2,200 crores. That is X of operation and maintenance, right? Now, over what period of time is this booked, this 2,200 crores?
Look, so we've been given time until June 25 to execute both these orders, which are across Gujarat and Rajasthan. And I think we should start delivering, supplies as well as services for this contract from beginning of FY25. So maybe Q1 FY25 is when we should start execution of this order.
And once you add up the maintenance part of it as well, typically for a contract like this, what is the additional maintenance revenue that you can hope to garner on a yearly basis?
Look, so typically it ranges from 8 to 10 lakhs per megawatt per annum, which would, and that's from year 3 onwards. You typically give a 2-year free O&M period. But ballpark, I would say this would translate to about 25 crores of O&M revenue for our O&M subsidiary called Inox Green on a yearly basis for the lifetime of the contract.
What would be the revenue recognition? You've given us the order size totally. It starts in Q1 of FY25. But every year, how much would you be recognizing? Or what would it be? Would it be staggered? Give us some more color.
Well, I think it would be uniformly spread out across, let's say, a Q1 FY25 until, say, Q1 FY26, given that we have time until June 25. It's very hard to give a specific timeline, but these are rolling contracts. You'll keep supplying turbines. Obviously, commissioning is a little back-ended, but other than that, it should be fairly uniformly spread from Q1 until Q1 of FY26.
Got it. And you also said that from now, by the end of FY24, your order book, you're hopeful will cover you for FY25 and part of FY26. So the current order book is 1,550 crore. In the next 3 months, what's the visibility of adding more orders, winning more orders?
Look, I think we have a huge pipeline of orders which we expect to close as we continue moving from now until, let's say, March FY24. I think what we've stated in the public domain, and I think this is a lot of the analyst estimates out there, we hope to do far better than that. I think, broadly speaking, what's already in the public domain, I think various analysts have put a target of about 2 gigawatts of execution over the next, in this financial year and 2 more financial years. But I think we are priming ourselves and gearing ourselves up at Inox Wind to get to gigawatt scale of execution in the near future. I think we've got all our balance sheet issues sorted. We've got the supply chain in place. We've got the manufacturing in place. I think we've rebuilt a very, very strong team now. And I think with the macro tailwinds with us, I think we should be far exceeding the numbers which are out in the public domain. Having said that, I think we from an order inflow perspective, as I said, we expect significant orders over the next couple of months. But I think there's a huge pipeline of PSU tenders which are out there. There's almost, I would say, 1.5 gigawatts of PSU orders, which should be awarded out from now until, say, Q1 of FY25. And this is across players like NTPC, NLC, SJVN, and this is besides a lot of the CNI players we are already in advanced discussions for closing orders. So I think we're pretty hopeful that we should end FY24 with orders which cover a large chunk of FY26 for us as well.
Devansh, hi, morning. The big sort of number which everyone has been fixated, and rightfully so, has been the 10 gigawatt number, right, every year for the next few years. So that's the flow, at least what we can expect. So what's your share of that? I mean, or is that? I remember we had a word with Suzlon a couple of I think 2 months back, and they said, well, before in the last cycle they used to have about a third of the share of tendering at that point in time. I mean, just trying to understand, where are you at already?
Look, historically, when the sector was rolling, we were typically about 15 to 20% of the Indian market. Having said that, I think what we prime ourselves up for is profitability. I don't think we are so focused on being the largest. I mean, we are one of the largest. We're probably the top 3 players in the Indian market. But I think in terms of profitability, we are way ahead of everybody else. So I would rather focus on profitability rather than just trying to be number one in terms of volume. Within which I think we probably have one of the strongest balance sheets in the sector. We probably have the highest promoter holding in any other wind company owned by an Indian in the Indian context. We are probably the only, we are the only A-rated wind OEM in the Indian market. So frankly speaking, I don't think it's a question of volume. I think the kind of order inflows we're seeing is phenomenal, and I think we're priming ourselves to ramp up operations. As I said, if you look at a lot of the analyst estimates out there, we're really going from, say, 100 megawatt a year for the past 4 or 5 years when the sector was shut down to virtually now, or say 700 crores of top line now to about 4,000 crores of top line in the coming financial year. Look at the various analyst estimates. I mean, it's multifold growth which we expect, and I think very, very profitable growth. So I don't want to get fixated on market share. I think I would rather be fixated with profitability, where we're the lowest cost producer.
So give us some numbers on profitability. Where are you at? Where will you go from here in terms of profitability numbers, margins, for example, in 25 and 26? Just a roadmap.
Look, I think what we've guided for is in the coming financial year, we should get back to our historical EBIT numbers, which were typically about 15%. So I think we're well on track for that. And I mean, currently the sector's just turned around. Everyone's getting back. So I don't think you would be able to make out much from the numbers in the public domain. But what we also said was every quarter would be better than the previous quarter over the course of this financial year. So in Q1, we turned EBITDA positive. Q2, we turned cash PAT positive. Q3 and Q4 are coming up. So God willing, we should keep getting better and better.
Okay. So on profitability, actually, I was looking at one of the brokerage notes that our colleague had shared with us, is ICICI Securities. They're expecting earnings of 440 crores in 25 and 650 crores in 26. Do these numbers ballpark sound, accurate in terms of projections?
I think we should be doing far more than that, God willing.
Okay, fair enough. Devansh, finally,
I think, Devansh, how much? Far more. How much better you think? I mean, if you can share any broad numbers without going into specifics, yeah.
Look, I think let me try and answer that qualitatively. Look, if the market is going to be, say, 8 to 10 gigawatts in FY26, I think it's fairly easy to assume a 15 to 20% market share. Now, if you put those numbers and juxtapose that into an 8 to 10 gigawatt number, you would get a volume of almost 1500 to 2 gigawatts, right? So I think from the numbers out there in the brokerage report, I think we could be way, way, way ahead. But look, yeah, I think let's see how the market moves. I think, as I said, we are priming ourselves up for gigawatt scale execution. And, God willing, I think we should be doing far better than what's in the public domain.
Devansh, thank you very much for joining in. Happy New Year. Your shareholders have indeed had a good year. The stock is up 350% in the last, this year itself. There you have it. In 1 month, it's up 75%, but 12-month rally stands at 350%. We will get into a break on the